Good afternoon, everybody. My name is Harry. I represent the Natural Disaster Fund, which is an impact fund capitalised by the governments of the United Kingdom and Germany, with a focus on providing and building resilience to natural disasters, global warming, extreme weather events to countries in the global south. It's been very encouraging to hear the comments from the panellists, especially from the World Banking, about trying to support and drive financial inclusion efforts. I'm very interested to hear ways in which us as members from the insurance sector, particularly in the UK and German governments, how the funds that we have that we can deploy to help communities that are often overlooked and underserved, how we can engage, perhaps not necessarily at either a micro or macro level, but maybe that middle grounding and meso level, how we can work together with counterparts to assist them in supporting their borrowing activities and to support those communities that can be impacted by natural disasters.
And maybe Graham can help us touch it.
My answer won't be so much about ensuring that trade. You need to find a good trade partner who's going to provide you that information, that instrument, in a particular way. And it's collateralizing and what's required for that, and the risk elements that go with it. I'm happy to talk with you afterwards to talk about our risk model, because again, we're talking about appropriate collateral for different markets. And that's not just saying, no, you can't do a trade, we'll make it 5 times the cost. It's actually doing it with a much more innovative way of providing the instrument to you at a reasonable price to do business. So happy to take that offline. The other thing really interesting is your comment about everybody says no, immediately mention Africa, whatever. One thing I'm a great advocate of, and I hope you are as well, is that the rating systems which are currently used for banks and financial organisations are creating a real problem, not just for Uganda, but for every country in Africa. There is no African bank in the top 100 banks in the world. The first bank that appears is number 154, which is Standard Bank. 150. 154 is ABSA. After that, it's way down. There are 850 banks in Africa. There are 42 central banks, 46 currencies. There are 2,000 languages spoken. So it's not surprising that there are issues with anybody wanting to invest is saying, where do I go? How do I do this? I was in Rwanda recently, and we talked with the government there about a new Project 54, connecting the 54 countries of Africa's central banks. So we get standardization, reusability, harmonization of the way things work, movement of payments that much easier. And again, we discussed that. I was in Namibia with the Commonwealth Heads of State meeting, and following that at the Zambia meeting. And the same question comes up. Ratings. We're not rated by Moody, not rated by Fitch. What we need is a way to have a rating which truly reflects each country's aspect of its major banks in its own jurisdiction and economy, so that you can be viewed in a different way that not only makes sense to the whole of the continent, but to every other bank worldwide as well.
Okay, thank you so much for that. In terms of there is a comment here from Honorable. Thank you.
Mine is not about trade financing, but something the lady from UPSA said. I've been intrigued for some time about the low level of trade, intra-regional trade within the community. It's about 3%. It's stagnated at that level for a long time, but it's very, very high. Europe, etc. So she mentioned gold and platinum. So it occurred to me that the Africans are not buying the gold, they're not buying the platinum. So these products are for Europe or for the UK. That's why we sell more. So the things we are producing for ourselves are not selling much.
Within the region.
Within the region. That's why it's 16%. Okay. So I think we find a solution for that.
Okay.
I think we're over-targeting the other market and forgetting the regional market.
Thank you so much for that comment.
Very quickly, let's respond on that. First of all, you're aware that the UK, in terms of total exports to Africa, is 3%. The other way around, Africa to the UK, total is 3%. It hasn't really risen that much. It's
balanced at a very low level.
It's balanced at a low level. So a 10% increase is going to be having a significant effect. So we need to find a way, the right product, the right services, and to rebuild confidence and trust with those organisations. That's something we hope to do with our footprint that we have in Africa as well. There's over 10,000 agents and partners in the 54 countries of Africa. So that's really important to understand how the business model can work for smaller SMEs who we've heard are driving those economies, driving employment, driving financial inclusion, and really helping to build economies and growth.
Great. You touched on rating, and I think I know Central Bank have approved us rating about 2 rating companies in Uganda. So we have credit rated companies that have been approved. One of them is cross-border. Conflict of interest, so I'll tell you which one it is. But yes, so we do have the process is starting, and I've seen a number of institutions being rated. But it's the opportunity that I'm looking for the opportunity, because if you remember what Julius talked about, your digital banking ecosystem has doubled and all the relatively solid banking. Yet the lending opportunities for the digital are not as good as the ones with the solid accounts, which is what you touched on.